Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 935th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Hello, traders. This video is being filmed on Monday night for trading Tuesday, October 23rd, 2012. This video is for trading on Tuesday, October 23rd, 2012. As we know, futures trading can be extremely risky, OMNI. It can cause substantial financial loss. If you do not recognize the risks behind trading, you certainly should not be a futures trader. Always use stops and know that futures trading is not suitable for all trading accounts. All right, traders, let's go. Video 935. One thing I will say is this. Thank you so much for all you OMNIacs showing up in my chat room last night. I got in front of the camera. I did one of those YouTube videos where I'm actually in front of the camera in person, and I was going, I have a live chat room. You know, I was kidding around like that. Well, a lot of you showed up today that never knew I had a chat room before. So bravo. Thank you for showing up to my chat room, and make sure you are there on Tuesday. All right, traders, let's rock and roll. What are we looking at? You are looking at the Emini S&P daily bar chart right here. We've had a double top. We called for the double top. We called for a short on this day. It worked really well, and we've come off. Since then, we've come off, but look what we just hit, traders. We smacked into this support a few days ago, which is a major support going all the way back here. And then we rallied up, came all the way back down, hit the support, pierced it on Monday, turned around, rallied, went all the way back to the highs in the form of one of those old-fashioned, no longer usable swing days. And there it is, traders. This is back above this major support line. I like it above this support line. I got to say, I like it above this line. And it tells me to keep my eyes peeled on the upside, not the downside. Remember, we are in a big, booming bull market. We've had a couple of down days. Boom, boom. That's it. I'm looking for upside now. So for trading on Tuesday, we are looking to buy the dips in the Emini S&P on the daily. Let's look at a weekly chart. Traders, a chart you've seen in many videos, the Emini S&P weekly bar chart. We know that repetitive patterns are the cornerstones of accurate technical analysis. I've shown this to you where we had the V bottom put in. It's a weekly now, weekly chart. ES. We had the V bottom that came in, and we drew in a parallel channel. It filled in, of course. We had another V bottom. The parallel channel fills in. We have a V bottom. Parallel channel fills in. Well, we drew in this V bottom, but guess what, traders? This parallel channel, if you remember, I put this in when there was nothing in it. None of these green bars existed. We only had the V bottom, and we dropped this channel out here and said, look, this is what we expect. We're expecting now this channel to fill in. And since then, this channel has absolutely filled in. Look at it. It's really filled in well, exactly as we expected, and repetitive patterns are the cornerstone to accurate technical analysis. So it's just back down to here. And if you'll note, you see this red line right here, traders? This red line represents the previous highs that we were at right back here. I'm going to draw another line for you so we can darken it in a little bit. But we've only gotten back down to these highs. So in other words, we put in a high. We backed off. We rallied back above that high, came back down to test it, and we've hit those previous highs and this yellow trend line at the same time. I say that bodes well for the bulls. So your Emini S&P on the weekly chart looks bullish, as it does on the daily chart. Let's look at more charts. Traders, your NASDAQ daily bar chart. Look at this one. Remember I showed this to you. First off, let's look at the major trend. We are holding this trend line, which we held every time we got near it, way back here before the contract was even most active. Then here, then we hit it again once the contract started becoming very active. And look, we got close to it right here on Monday. More importantly, we're back inside of this channel. I like that. Back inside of the channel. I say, because we are in a big booming bull market, we give this thing a chance. We're in the channel. Let's see how it looks when it gets down to this channel at some point tonight. It probably will be a buy. We'll let it test first, and then we'll see how it handles it. So that's your NASDAQ on the daily. Let's go look at a weekly NASDAQ. Traders, the weekly NASDAQ. Here's where it starts to get bullish and interesting. Look at this NASDAQ channel. Up, down, it hits, it holds. Up, down, it hits, it holds. Downside, it holds. Rallies up, comes down, stops cold on this line, turns around and puts a rally day in on Monday. I like what I see here on the NASDAQ weekly. I think that's very bullish. Remember this, traders. This chart starts all the way over here in the bottom left corner and goes all the way up to the top right. Look at this. Starts in the bottom left, all the way up to the top right. That is a bull market. And this bull market has just bounced off of a strong parallel channel, this yellow one. And I think it holds and starts to move higher. So now we have reason to believe the NASDAQ looks strong on the weekly, as did the S&P. Let's go look at more charts. Traders, the DAX, the German DAX daily bar. Big bull flag we've been monitoring for weeks. And look what happened. Look at this major support trend line right here. Major support. Once again, it gets tested in the German DAX. Major support. It gets tested here. It holds. Major support. It gets tested here and it holds not once but twice. Major support. Then it holds here. And it got above the bull flag, comes down to test the support. You got to like what you see there. Breakout out of a bull flag. Got to love this German DAX on the daily. But let's go look at the German DAX on a weekly. Daily looks great. Let's see what the weekly looks like. There it is, traders, your German DAX weekly bar chart. Looking wonderful. Look what it's testing right now. Look at this major resistance right here. It's testing it. It seems to be getting above it right here. It's holding inside of this parallel channel. What's more, it got above this double top previous high and came back to test it in the fashion of a bull flag. Look, in the fashion of a bull flag. You got to like what you're seeing here. Now, I don't really give flags a lot of credence in a weekly chart, as much as I would give to a parallel channel, but it is there and it does exist, so I thought I would at least fill it in for you to look at. So a bull flag right at the top of this major resistance line, and you are holding a steady parallel channel on the DAX weekly. That is bullish if you ask me in the DAX. Once again, bodes well for not falling in love with the downside. Make sure you do not fall in love with the downside. We are in a big bull market in U.S. indices, and you need to be buying those dips when they come. So there are some indices. Let's continue to look at more charts. Okay, traders, a very interesting little chart here, the corn chart. I've shown this chart to you many times in the past. I wanted you to take a quick look at this corn chart so that you can see what a topping pattern looks like and what a topping tool that I use looks like. As you can see, when I noticed it was starting to run into this topping tool, you can see how many times it hit up here and here and here. But each time it would hit and drop down to the bottom rung. This one, the blue one. So it would hit up to here at the red, come down to the bottom, hit. And I thought it was starting to get top heavy. So right around here, we called official top in the corn. Since then, the corn's been coming down. It's had one rally so far, and look where it's running into resistance right now, back at the top of our tool. So corn does look like it has topped out. We are sellers of rallies in corn. We do like the downside long-term in corn, meaning over the next few weeks to months ahead. There is your topping tool, and that's what the corn looks like. Let's go take a look at soybeans. Traders like the corn. The soybeans looks to me like it's had its major run, and boy, it had a major run. Got all the way up here, right? Big run. But since then, it looks like it's put in this big head and shoulders formation. Big head and shoulders formation. Left shoulder, head, right shoulder. From here, it should project lower. So what should happen is once this right shoulder is completed, we should then find ourselves having some sort of a drop. Something like this should come our way in beans after the right shoulder is complete. So big upright head and shoulders, bearish for soybeans overall. We think the soybeans is a sale on rallies just as is the corn. So, interesting, I showed you a topping tool in the corn. Let's go back to financial markets now. I want to show you that same topping tool on a bond chart. Traders, U.S. T-bonds, 30-year T-bonds. This is a topping tool, the same sort of topping tool I was using to show you the corn. As you can see, there's only been one blow through so far. Only one time we've gotten above this topping tool, came right back down to respect it, hit again up here and respected the top. Since then, it's been coming down, hit right here, completely respected the top. Now I think shoulder, head, shoulder, failed head test. I think that's what this is, and now we start to head lower. So you should run into resistance if bonds get near this red arrow or this blue line. This was just updated at about 1:03 a.m. this evening as I was looking at the bond chart before we started the video. So I wanted you to see. Also, traders, bonds is in a bear flag right here. Look at this bear flag on your bonds daily. So you even have that now to contend with. At the top right here of this rounded tool, I think bonds will continue lower. Now, don't forget, FOMC meeting on Tuesday and Wednesday this week. Today is Tuesday. It's for Tuesday and Wednesday. Very likelihood is that the Fed say something and scare bonds all the way back up here. But for now, we're going to respect our analysis. We are not going to fight the Fed, but we are going to follow our charts. And for now, the charts are telling us that if you get near the blue line, you head down even lower. There is the bear flag right there. Let's see what bonds have in store for us. Traders, let's go back to one chart that I thought looked great. And that chart would be the Emini S&P. The Emini S&P looks great right now when you look at this bar getting back into the daily trend. Major daily trend channel. It's back into it. Remember, we are in a big booming bull market. Companies like Apple had a major turnaround rally day on Monday. Probably will have some sort of pulling the market up effect on Tuesday. We are looking to buy the dips. Traders, if you like what you are witnessing here, come on down to livewithoscar.com. Come into my free trading rooms. Allow me to help you understand the analysis in my chat room. It is free. It's at livewithoscar.com. Thank you so much for tuning in to tonight's presentation, and I will see you back at the site. Remember, traders, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll and watch for the turnaround to come on Tuesday. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.